Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. Uh, Heads up, having some technical issues, and if they are a problem, I will have to drop the stream in YouTube, but it will be posted later. And if you are in the Bookmap Discord Trader Lab community, I'm going to try to continue streaming there. Either way, this stream will be available since we have FOMC Day and it's an important day. Thanks for your patience if we do have some challenges. I'm streaming from Costa Rica, and we have a rather poor infrastructure where I'm located and have not been able to resolve the challenges. So appreciate your patience on this. One moment, please. Dan, how are we doing so far? General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equity, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's get into it right away, guys. I want to start with the higher time frame. As you guys who've been following the stream and also our participants in Trader Lab, I have a, let's just say, a thought process that suggests we are developing into a bear market. And while that is not anything really important for day traders, what is important is that we get a look at the higher time frame and try to see what's going on. This is the all-time high. It's being reflected in the current contract, which is the June ES. And if you will notice, we have been making lower. This is called basically microcomposites. And what they are, they're showing us value in consolidations. Value has been consistently moving lower, and the market does rotate over itself. However, over time, what we see is value is being accepted lower. For me, this is an indication of potential, and everything is subject to change, bear market behavior. Now, the thing about any market is that it rotates. And if you guys remember, I always say the market goes up to go down, and the market goes down to go up. The market goes up to go down. And that's the rotational nature. And why does the market rotate? Well, it tends to rotate because if we have sellers in the market, their buy stops are in the market also. And that's what leads to squeezes. And if you want to think about this as day traders, or even if you're a swing trader, or however, you slice and dice the market per your time frame, there's always a weak side. And the market squeezes. Now, why does this happen? It's just the nature of how markets rotate. And even if you're a short-term trader, you know the market generally is not one directional, though it can be. Most of the time it moves in a direction in any fractal time frame and then rotates back on itself. And it doesn't matter if you're trading, I'm using the term time frame loosely here. If you're trading a 15-minute, 5-minute, 30-second time frame, there are rotations. We'll just take that concept and expand it to RTH, or daily time frames. Now, if you've been following this stream, you know that these tops from these 2 days had buy stops above them. Why? Sellers. Buy stops were sitting here. So this day was a buying day. So we had only longs on this day if you follow the stream. And what was the object of this long? What was the primary target? To get up into these stops right here, the buy stops sitting above these sellers. And we accomplished this on the day before yesterday. Now, initially, I thought, and it doesn't matter what I think because the market's the ultimate truth, that we had gotten these buy stops out and then we had closed inside of this range. So my thesis coming in yesterday was to look for sellers. But what happened was in the ETH, it's set up differently. So it's set up buying. And it's not about being predictive in this business. It's about alignment. So it's not about you're right or wrong. It's not a right or wrong thing. One thing you'll find as a trader is alignment. Our job is alignment. It's not prediction. So yesterday was a surprise, but it was longs only until the end of the day. And here's the kind of canary, as they say, in the coal mine. And I have to feel bad for canaries. But the top of this consolidation was 63.5. Right over the this wick of this day. Buy stops are sitting above this leg. What did we not do? We did not take them out. That is the canary in the coal mine. Why? That means the sellers got ahead of the buy stops. They were aggressive sellers up in this area, and the buyers ran out of juice. So who were the buyers? The stops. The stops. Those being squeezed out. And remember, the market goes up to go down and goes down to go up. So what did we do here? We took out the sellers, except for the sellers that had their stops up here. All these guys in here got thrown under the proverbial bus. What is that set up for today? What we were looking for yesterday. The sellers I had anticipated in this up move, which turned out to be get long instead of get short, came in today. So that's the nature of trading. It's always random, but there is rhyme to it and reason. So for me, the dominant side is the short side. And that doesn't mean we don't get long. Does that make sense? And by the way, if you're in YouTube, remember, if I have technical difficulties, the YouTube stream will drop, and I will continue in the Bookmap Discord Trader Lab community, and also this stream will be posted later on YouTube if you want to review it, just in case we have technical difficulties. So, and if you have questions, please post them. I'll do my best. We got a lot to go over today. A lot of structured trades showed up. And those of you in Trader Lab, I hope you've enjoyed today as much as some others. And if you haven't, remember there's structured trades that I've shared in the Trader Lab for all of you that you can reverse engineer, and those trades show up. And when they do, if they're vetted and you have an edge, your job is to interact with the participants, take risk, and potentially get rewarded. And not every trade works because it just doesn't work that way. But vetting a trade and having a trade plan is working a statistical edge, just like the casinos do. So I want to show you a couple elements here, if I can, hopefully. And that's why in Trader Lab, trade plan. So let's try to get back. This was the retail price, I hope, from yesterday's RTH. And I always suggest to traders in Trader Lab, you need to be looking at the previous RTH yesterday, which was a squeeze, the failure to take out the high of the distribution or the micro composite. That's a consolidation. The sellers took over towards the high, and the weak or the buy stops above, as I just showed you in the higher time frame, did not get taken. That's the warning Will Robinson moment. Why? What did not happen? And then in the ETH, we have the next auction, which is the next canary in the gold mine. This was the highest volume in yesterday's RTH. Where is the ETH high? It's right here. What does that say to us? Maybe this is too high. This is auction market theory. Now, auction market theory, let's just say what it really is. It's shopping. And in the shopping experience, if a price is too high and you're in the S&P market and you want to buy S&Ps, and you come to the store and you look at the price, and for whatever reason, and we don't need to know, the market tests here and we reject it. What does that say? Maybe too high. Now, in the ETH, the highest volume in the next auction is right here. The overnight volume point of control, same as that, lower. So, too high, retail, last auction, now RTH open. Now here we go. What this suggests to me is the big warning, Will Robinson, go for the bunker, and possibly now the longs are going to get thrown under the bus. Does this make sense? And guys, remember, if you're in YouTube, if there is difficulties, this stream will continue. If possible, in the Bookmap Discord Trader Lab, you can use the link in the bottom of YouTube. If you want to get in there, be sure to do that. Plus, there's a lot of additional education available at no cost, and the Trader Lab is no cost, which is pretty amazing if you ask me. You got to thank Bookmap for that. So we have what's under yesterday's low. Stops, stops, stops. And what did we miss yesterday by a couple ticks? The naked volume point of control from a previous day. Too low. This is what sets up the squeeze for yesterday. And when the market goes up and it finds too high, where might we go? Take out the stops of yesterday's low and forward the light brigade south. So with all that, now you know trade plan and understanding market mechanics. Because if we don't understand market mechanics, how are we going to derive an edge over other traders who have no idea? Now, it's not that you can't have winning trades even if you don't have anything going for you. No plan, no nothing. Of course you can. But do you have a statistical edge, and can you maintain yourself as a potential career trader? I don't think so. It's just an opinion. But 45 years of opinion, so I think I'm entitled at least to an opinion, not saying I'm right. So let's take a look. Based on all the things we know, possibly, if the higher time frame trend, which has been progressing and migrating downward, the dominant side, in my opinion, and it doesn't mean it has to be yours, not the point, there's no right or wrong here, is sellers. Squeeze the shorts. The higher time frame participants take out or squeeze, and the nature of the squeeze is it's how the market rotates. We want to sell primarily the squeezes. So the market squeezes, we want to sell. On the other side of that, when we participate, we can also participate in the squeeze, because as day traders, we can play both sides, which is the whole point of being a day trader. However, we need to understand the mechanics of the market so we can interact with an understanding of why certain behaviors happen. The challenge for us is it's always random. So, you got to kind of think of it from a number of different angles. And please give a like if you're in YouTube. And remember, if the stream goes south of the border, it will be posted later so you don't miss out. This is going to be an important stream. There's going to be a lot of Trader Lab structured trading in here. And I always say to all traders who are developing, you're not here to play a video game. You're here to be disciplined and only interact when an edge shows up that you have vetted. And you still need to accept the random outcome, because just like the casinos, they don't control the cards coming out of the deck or how the gamblers play. They do control the games. So in the Trader Lab, it's about controlling yourself and only interacting where you have an edge. So based on what we know, we want to get short. Now, of course, the joy of joy is where, when, how. So let's go. Are you guys tracking? Give me a yes. Let me know you're with me. How about a like in YouTube? Okay, let's go. All right, buyers. Now, remember, we are opening inside of yesterday's range, but below settlement. So that sets up, and I'm not going to go over probabilities. We have a whole range of statistics that are available to everyone at no cost in the Trader Lab. If you're in YouTube, use the link in the bottom of YouTube if you want statistics. There's 60 PDFs of structured trades and a library of webinars, not to mention the Trader Lab community that has come together. It's a full range of trading experience from newer developing traders, and our senior trader has over 50 years trading. I have 45 professionally and out here with you in the tall weeds. Here we go. So this is called developing volume point of control. Fancy term, a point of control is high volume. And if you want to, again, relate to this like shopping, high volume's a retail price. However, if we find the retail price is too high, same as above, we can leave it. Also, and you have to vet any statistic I quote because I'm doing them from memory here. I am in Costa Rica. Not that that has anything to do with this, but I got a lot to cover. There's over a 90% probability we'll take out either the ETH high or low. I don't know about you. Considering the structure of the ETH high, that we tested a key level and rejected it, what do you think? High or low? Me, I'm voting for the ETH low, over 90% probability. Past performance not indicative of future results. You got to vet this for yourself. So this is the first target. Now, I'm going to also touch on some advanced processes today, but I'm going to try to let you know what's advanced and what is sort of, I don't want to say boilerplate, but part of those 60 PDFs, you can kind of start out and then you need to reverse engineer. But I've shared 45 years of experience in the Trader Lab. And a lot of that experience, you might say, is what they call the weeping and gnashing of teeth, because I did everything you've done, except since there was no information when I started in 1980, I spent a lot more time trying to find out what worked, what didn't work, and I didn't understand why things didn't work, especially indicators and time frames, because you kind of accept certain things. I mean, why would you have a toolbox with all these indicators? They must be good. Well, they are good, except they're inconsistent. So we spend our lives as developing traders looking for the right indicators in the right mix. I'm going to suggest something for you to ponder. Do you think every indicator on the planet and every combination has been gone through by every trader who's walked in your shoes, who's tried to mix indicators and time frames, and the problem is everything works sometimes, but does it actually have a statistical edge? So we spend our lives looking for indicators, looking for time frames and the right mix. And if you exponentially put time frames and indicators together, it'll take a lifetime. And even then, you're going to end up most likely with the same outcome. Random outcomes, no edge. If that's you, you might want to think about visiting the Trader Lab community. It's up to you, but everybody's done the same thing. Now, this is a variable high volume node. I made the term up. I have no idea. When I started doing this kind of thought process was not out in the public space. I fell over it myself doing research. I saw what I thought was anomalous behavior, and I was trying to understand what was going on. What it is as the volume shifts, since I don't use indicators, I had to strip all my indicators away. Very hard to do. You know, you grow up with indicators and it's like, well, I like having this something or other on my chart. Look how it works. Sometimes I'll make it better. Yeah, sure. In the meantime, the clock is ticking. We only have a certain amount of time and a certain amount of assets. Back when I started, there were no simulators. You wanted to trade? Get your checkbook out. That's how I started. So it was a rather expensive endeavor. So let's look. Here we have buyers. Now this is not a structured trade, so I'm going to leave it and let's follow. Here's what we have happening. This is the retail price. How are we doing, by the way, in YouTube? and Discord. We still good? Okay. So we have resting liquidity. Let's not forget this. And it's at 5,700 strike price. This is how Bookmap provides additional insight. I can't get into all the elements, but I'm going to do my best today. Notice how we get more liquidity front running. Let's see what happens. I have no idea, by the way. Now, this is very important. What you see happening is the spread or the movement of VWAP and mid is separating from the developing volume point of control. This is showing us that potentially an aggressor and a directional move is developing. Notice the liquidity. We get what's called VPOC migration. I'm going to label it. And it's at the ETH low. If you'd taken a short, and the short I'm discussing here is not a structured trade, but traders in Trader Lab did take this. Remember, the initial idea of the Trader Lab was to get traders to understand the business of trading, how the market works, and to vet structured trades so you can anticipate in order to participate. I made the term up. So, notice the liquidity. Watch. So we have VWAP, mid, and our buyers are here. Now, I'm going to get into a little more into order flow. So here, look at the insight. Now, what is this coming from? The limit order book. I remember when I first saw domes, and I don't remember exactly when it was, late 90s. I don't know. Can't remember anything anymore. Been so long. But you know, and it was a very limited price ladder. And then we had the limit order books. You'd be looking over here. You'd be looking all over the place. You couldn't see what was going on. I can't look here, look there, and everywhere else. So this is so novel. When Bookmap came out with the heat map, now I can look here. The beauty of this is the tools, because you can find in Bookmap, and I have to tell you, I've had Bookmap since, I don't know, I think 2015 or so. And it is amazing what they have done. They started out with this, and then it went on and on and on. And you can see it's evolved, and there's so many other things in the works that the developers are working on that I really am not able to discuss here. But I can tell you, it's just going to keep getting better. So, and I find it gives me an edge. Don't you want edge as a trader? Now let's look at this. VPOC migration too low. Why? Why is the market going up here? Why would these guys come in with liquidity? And now I don't have the answer, but I'm going to pose a concept to you. Is it possible, if you want to sell S&Ps, that you might come in here, cause a rotation, take out the weak sellers? Remember, the market goes down to go up in all fractals and time frames, and goes up, maybe, to go down. Why are these guys squeezing? Maybe to get short at a better price, huh? What do you think? So, I'm going to go into micro now, very briefly. Going to try to show you some ideas. Let's do it. So, too low. Now, the yellow line is called developing volume point of control. It is only measuring volume. So as the volume migrates up and down the price ladder, if you will, this yellow line is only measuring the high volume. But if this is high volume and I leave it, it is saying in the developing time frame, this is too low. And it's telling us there's more volume here than there was up here. Obviously, if this starts at 0 and they do the Acapulco cliff dive, and then we pause, there'll be more volume here. So you understand how that might happen. Too low, retail. Too high, watch. Out here, right here, is something called a low volume node. And you can learn all about this in Trader Lab. I can't get into it because of time restraints. And I'm trying to run through this. There's so many trades that showed up today. I hope I can cover all of them. I'll do my best. And if not, you can come to Trader Lab. So up here, 26 buy stops, 8 buy stops. This is the only thing I use from Indicator World, and that is divergence. If price goes higher, and why are we going up? Do you think it's buyers who are initiating? Is it a squeeze created by this buy stops? And notice higher price, less stops. What do you think? Interesting? And what is this? An aggressor. So are those buyers, or are we seeing the buy stops? Market orders. Delta. So you guys who love Delta, what is Delta? It is measuring aggressors or market orders. Well, aren't stops market orders? Are they truly aggressors who are initiating, or are they just getting squeezed out? That's a question for this astute audience. So, micro high volume structure here. Sellers are below the buyers. Warning Will Robinson moment for the longs, if you're thinking long. And this is a structured trade in the Trader Lab. Here's your micro high volume. Here's your developing volume control. Here's your stop divergence. Here's your seller below the buyer. There's nada going on up here. Break low, Trader Lab trigger, test, short, stop 3 ticks above here. You must vet. Entry here. Hasta la vista. Let's see what happens. Don't remember. It can do anything. Thanks for playing. Send you a couple parting gifts and a ticket to the buffet. Are you guys with me? Now that's the first structured trade. Dan, we doing okay? How we doing in Discord and YouTube? Please give a like if you're visiting in YouTube. I need the like. It gives me, shall we say, incentive to continue. Now I'm going to show you some other tools here in Bookmap because I use them. I only show you what I use, but it's not limited to what I use. That's the beauty of this. Everybody finds what speaks to them. And for the stream, I try to keep things as simple as possible because complexity is not our friend. Complexity creates conflict, thrashing. And when you have conflict, you cannot, in my opinion, act quickly. This is micro high volume structure. It's right here. This was too high. This yellow line is our developing volume point of control. Retail. This is the mid. This is the VWAP. This is too high. Out here is an outside edge. We don't know that at the time. Here's a couple little pieces. I'm going to now go down into fractals. More advanced. So not necessarily anything you guys ought to be doing, but sometimes I like to show you some stuff. Because you can learn this. It's not that you start out doing this. It's you start out with broad strokes. Because if you can't trade the broad stroke, you will not be here to learn the minutia. Too high, trigger, test, short, stop here. This leg. Sweep, sell sweep, often. And I say often, doesn't mean always. There's nothing mechanical. You actually got to learn how to trade here, guys, not be an indicator. It's about trading. It's not about indicators. If indicators worked, everybody who used indicators and mixed time frames would have ATMs in the basement. Doesn't work, does it? If it's working for you, come to Trader Lab. We'd all be interested in that. This is a structured entry, a little more advanced. Limit order, 1 tick here. Stop, 3 ticks over the consolidation. It's about a 3-point risk. That's before you develop nuance and understanding. Here's some more. Sell sweep. What do we consider when we see a sell sweep? Counter rotation. What do we get? Sellers, counter rotation. Short, sell sweep. What are we thinking might happen? Counter rotation. Doesn't happen. There's nothing mechanical. Come on. Sell sweep. What am I thinking? Counter rotation. Well, what happens here? Sell sweep. So I got sell sweep, sell sweep. What do I anticipate? No clue. And by the way, yesterday's low. What's under yesterday's low? Sell stops. What was our downside target for longs that I narrated yesterday? It was for a test of this. Well, it missed it. Well, that's a retail price. Guess what's a target? Yesterday's low and this. If you're in Trader Lab, you'd have this, a tick or two ahead of it, and this. But the stops are here, so longs under the bus. Thanks for playing. They also get a ticket to the buffet. Now what? VPOC migration. Everything above. I'm not paying that. And where do we come back? What's this? Another short in the Trader Lab. You know that if you're in Trader Lab. Now, if you're visiting in YouTube, you might have missed that one. But, you know, how we doing in Discord? Are we hanging in there? How's the audio and video, and how you guys doing in YouTube? Please give a thumb up. Support the channel, if you will. Subscribe. And there is a link in the bottom of YouTube if you would like to visit the Bookmap Discord Trader Lab community. It is serious business in the Trader Lab. It's not romper room. And download the 60 PDFs of structured trades. Now, here's what we might anticipate. If this is too high, this now is called a low volume node. I'm going to label it. And now what is this high volume, low volume stuff? What am I doing here? The auction is made up of something called distributions. And a distribution is just a rotation of volume. So when you see something like this, it is the auction. And what the auction is, what's too high and what's too low, and it rotates. Well, if we find an area that's too high, like out here, and that's also a low volume node, you see how it brackets? We can use those outside edges as boundaries because the volume dried up at those outside edges. Now, there's another little trick to this, of course, and that is it's an outside edge. There's going to be stops here. Okay? Now, market could do whatever it wants to do. It doesn't care about anything. So we come back up. Our high volume is here. This is resistance. This is the outside edge of this distribution. I'm covering a lot today, guys. I want you to learn, and I want you to come to Trader Lab to learn more. Low volume node. So, short, south of the border, targets. Let's keep going. Let's keep going. Watch. Now, next on the hit parade, this is called the microcomposite volume point of control. Higher time frame as you think about it. Let me see if I can do this. Maybe not. Nope. Something disappeared on me. Let me see if I can find it. If not, nope, can't. I want to show you that higher time frame, but it went south of the border. Literally. Okay, can't find it. This is a higher time frame, intermediate time frame, volume point of control. It operates the same as these, except it's higher time frame. It's another target. Just saying. Sweep. Let's watch. And watch the liquidity. Notice the liquidity stacks. Let's look a little further. Outside edge. Here. Resistance. Why is it resistance? We're under yesterday's low. And this was our naked volume point of control. Too low. Target for yesterday. Missed it by a hair. C'est la guerre. Now what? If it was too low, now it is too high. Short against here. This is advanced concepts, guys. You can learn this in Trader Lab. Now, you're looking at something and you're probably thinking, what the heck is going on? You should have seen when I first learned this from Peter Stottlemeyer, who created it. I learned market profile in 1985, and I did a great thing. I messed it up completely because I was still using indicators. And I put them together and said, I'll make it better. Well, that threw about 2 years out the window. How many years have you thrown out the window? Not as much as me, because there was no education when I started. It was buy a book, and we'll see you later. And there were no off-floor traders when I started. At least I didn't know any. All my friends were floor traders, because that's how it was done. No domes, no nothing. You write your order on a piece of paper, timestamp it, and pick up the phone and call your guy next to the pit. How's that? Try that today. Too high, break, outside edge, low volume node, outside of the distribution. Sweep was here, which indicated possibility of counter rotation. See? Come back here, test the volume here. You could see it right there, that node sticking out. Think of it like shopping down the street. I'm not paying that. Get out of here. I'm not paying that. Yesterday's low. Get out of here. South of the border. Another short in the Trader Lab. Now, watch. So, short, 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 short. Any longs? Up to you. Another trade in the Trader Lab. Again, VPOC migration, sweep, counter rotation. Buy sweeps is the opposite, suggesting continuation, not a recommendation. You got to learn. You can learn in Trader Lab and the Bookmap Discord server all kinds of education on order flow, stocks, options, crypto, swing trading, algorithmic behavior. Another short in the Trader Lab. This is a structured trade, and we get a sweep. What does a sweep say to us? Maybe a sell sweep, counter rotation. The buy sweep says counter rotation. If you took this trade, or you took it here, or you took it here, all of these are structured trades in Trader Lab, and you'll notice the VWAP, and wherever the mid went, we are separated, which says trendish. Watch. Another short in the Trader Lab. VPOC migration. Watch. Resistance. Resistance. I got to label this. Getting lazy here on you. But I'm trying to cover a lot. If you're in Trader Lab and you're disciplined and you have a trade plan and you know where your edge is because you've done the work, and this is all about statistical probabilities, not predictability, you'd be having a super day today. And if you visit the Trader Lab, you're going to find that traders are having a good day. So right here, if you took another short, let's look at it. It's approximately a 3-point risk. You take your short, it's against here. Subject to where you're entering, you would either get scaled, scratch the trade when it breaks above here, or take a stop. So let's toughen up, guys. Everybody pays to play, if you will. Now, next structured trade we have is called VWAP. I've shared these in the Trader Lab. What else is sitting up here? High volume, right? You remember, don't you? Short in the Trader Lab. Scale is here, and then you put your helmet on. And there's more. Something called the IB stat, and I hopefully am going to get caught up here. The first hour's high or low, called the IB stat, has over a 90% probability. Past performance is not indicative of future results. And you got to vet it. The first hour high or low has over 90% probability getting taken out. Now, I don't know about you. I'm going to bet on the low. You tell me if you think it's going to take the high out. Just saying. Actually, you don't have to tell me, but I'd like to know why you would think that. So this trade is from here to here. That's approximately 8 points. And then to here, and then trade management. Watch. Now, there's more. I'm really trying today, guys, because I want you to see what you might be able to learn. And I say maybe because not most, but many retail traders are not willing to put the work in. They're looking for a dopamine fix. And that's, to me, very regrettable, because I believe if you come to Trader Lab and you do the work, that you can learn how to trade. Now, being able to trade is another issue, because you have to do the work, and it is work. It's not the pleasant part of trading. But in Trader Lab, you bring your plan to the market. And when the pieces fit, your job is to execute a plan that has an edge. If you don't have an edge, you're playing a video game. And that's fine. But I always suggest go to the casino, get the cocktails and the ticket to the buffet. More rewarding. And you will have winning hands, just like all retail traders have winning trades. But that doesn't mean it's sustainable. Here's your sweep here. Now, a sell sweep here is not at outside edge, so it's not material for me. Could be for you if you vetted. You can show me how to use it better. I'm not saying I have all the answers. Here's your VWAP. And what is our structured trade? Resistance, VWAP to VPOC. Right? You've seen this before. And then what? Watch. So, short to there and wherever. Looking to get under here and go south of the border. Where's resistance? You're going to ask me. Let me show you. Now, I wish this rectangle would expand, but I think maybe that'll happen, hopefully, because it'll make it easier. Where is resistance? There. 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 Limit order here. Stop there. You got to vet it. Welcome to the Trader Lab. Hasta la vista. We'll see you the next time. Now, there's more. By the way, I didn't cover, I want to mention this to you. Notice the liquidity comes in the book. Why is this liquidity coming into the book? 682 selling icebergs. Do you think somebody wants to dump some inventory? Perhaps. Wouldn't it be nice to know? I think so. That's why it's on my chart. So short in the Trader Lab, back to here, another short, sweep. Remember, sell sweep. Where's it located? It's in the right area. Let's watch. What is this? Watch. Low volume node. Follow the yellow brick road. You've heard that before, right? I believe if you come to Trader Lab, no matter what happens, that you're going to have a different view of the market and how it works. Doesn't mean you'll ever be a successful trader. You have to do something different than what you've been doing, and it's going to require self-discipline and reflection. You're going to have to learn about yourself, your need to be right, the psychology that interferes with your intentionality. We are wired for fight and flight, and the flight is from risk. So that's what creates our need for certainty. That's why you're spending most of your time in your potential career development looking for confirmation and certainty. How about you're in an environment where it doesn't exist? If it doesn't exist, how can you solve for it? Maybe you need to be solving for something else. Oh, good. I have a fire alarm going off here. This is adding an element of excitement to trading. Anyway, guys, I hope everything is still, as they say, okay. I have a fire alarm going here, so I'm just going to grab the fire extinguisher. I don't know if you can hear the fire alarm. Okay, we're in real time. Now, here's your sell sweep. This suggests counter rotation. Here's our buy sweep. We're coming back to VWAP and variable high volume node. Guys, there's a link in the bottom of YouTube if you're interested in the Bookmap Discord Trader Lab community. I'm going to have to switch some levels on here for you. We're going to go into real time now. Good, they turned the alarm off. Could have been the monkeys, you know. They like to, you know, something's has a little red thing on it. So let's see if we can get our levels in here. Back to the VWAP. Now we're coming into a balanced area. So right now there is nothing. Let's see what happens. See if I get my levels working here. One moment. You have questions, please post them. Apologies if I haven't responded. I am having a little bit of challenge here technically, and I appreciate Bookmap support being in the stream here with me. I'm going to say Costa Rica is a little bit of a challenge on things like this. You know, the wind blows or the monkeys swing on the vine and creates a problem. Please give a like in YouTube. Use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. It's a serious community of like-minded traders who come together to leverage their collective experience. There's no cost. There's a library of webinars. You can see what this is all about. I think you'll find it rather different. And it doesn't mean there's only one way to trade, but I will say that many traders in Trader Lab have changed their outcome. And the thing about it is, I did a webinar on called Trader Groundhog Day. So there's really nothing here at the moment. If you're a short-term trader, you can trade a rotation, but this is balance now. Let's look at balance. Too high. Now we know where too low is, you know, low of the day so far. And we have FOMC, so you better wear a helmet for that thing. I don't trade FOMC. There's no way to manage risk in that environment, so who needs to fiddle with that? But I do trade after FOMC. This can be rotational trading, and it's more of a scalping approach because your outside edge is actually out here. So if you get involved in here, you might only be doing this. I can't say because I don't know. But there's your sweep, and out here might be a target, IB low. So it'd be from here to here. And there's your volume sitting here. See this node sitting? And now I'm going into advanced again here. So this area out here is a micro support. This is a potential short to there. Now, do you trade this thing? It's 10 points. I'm not saying you shouldn't. I don't have an opinion. I'm not here to give opinions. I'm here to help you understand trading. And then you design what fits your psychology. Traders in Trader Lab are taking this trade. Other traders in Trader Lab are working on their crochet. It's all up to you. Ordering a pizza in for lunch. How we doing? You guys okay? Someone just posted Trader Lab statistical targets. Remember, guys, you have to vet everything for yourself. No matter what. Doesn't matter who you hear it from, but I'm going to say in Trader Lab, you're going to get the straight oil from the can. As we say, the good, the bad, the ugly. Everybody takes stops. Everybody has losing days. Everybody hits their loss limit. Let's get real. Doesn't matter who you are or how long you've been trading. Some days, and hopefully most days, the market and your plan are in alignment. There's going to be days where you can't, you're out of alignment, or that behavior does not match your edge. And what's going to happen on those days is you'll be doing the same exact process you see here today, and you're going to be taking stops. And you're going to go, well, why is that? Now, most of us retail traders, when that happens, is we go into the, let me fix it and make it better. Well, if you've done the work and you know you have a statistical edge, you're not going to change anything. What you're going to do is say, I have an edge, and I know over a random distribution of outcomes that this edge shows up. What we don't know when we have an edge, just like the casinos don't know, are they going to deal a winning hand for the house, or do the gamblers get paid? And yes, there is cost of production and overhead in every business. Don't think it doesn't exist here, because we do pay the gamblers, and that's okay. We have to pay the gamblers in order to extract our edge. You don't notice the casinos changing the games because they pay a gambler and they walk out with a suitcase of cash, right? And yet they pay the gamblers, and they can afford to give you the cocktails and the ticket to the buffet. And maybe if you're a roller, comp your room, fly you in, and give you tickets to Adele. How can they do that? Because they only play games that have an edge. So if you understand the business you're in, which is not a predictive or a confirmation business, it's a business of edge, it'll change everything for you. How do you look at this business? Are you spending your time trying to find certainty and confirmation? Why are you doing that? I can tell you why. It's our primal wiring. Oh, is there a saber-toothed tiger behind the rock? Oh, I'm going to go the other way. Or let me make sure. Well, that is great for survival of the species, but it doesn't fit in trading, where we have to take risk in order to seek reward. It's counterintuitive, and it's counter to our primal wiring. That's why no matter what you intend to do, why can't you do it? And then why all of a sudden are you clicking the mouse and chasing the market where you have no trade? It's because the prey, if you will, is running away from you. And now you're going to chase it. All those elements coalesce and defeat you. And a lot of that has to do because you don't understand them. Because we all buy into the concept that it's indicators and time frames, or we go out in interworld and it's the only one thing you need, and we see all this nonsense. You guys are exposed to so much, in my opinion, I'm using a term, I'm being generous, nonsense, that you may never find your way, because you're going to spend your time trying to get the only thing you need to work. And there goes another 6 months or a year of multiple ideas trying to make them work together. If that's you, and it doesn't work, and everything works sometimes, which is the catch-22, but it's not consistent and you're not able to apply it, then you might want to use the link in the bottom of YouTube if you're visiting, and come over to TraderLab. It's like enough is enough, isn't it? Up to you. But as long as TraderLab is no cost and available to you, I'm going to give what I consider a strong recommendation that you take advantage of it. What's this trade, by the way? Where's the target? It's there. Right there. Where do we come? Right there. This is a advanced structured trade. It's there to there. I don't know about you. It's only 10 points. Would you be okay with that? I'm not saying you'd get it. How are we doing in YouTube? Guys, I need a like. Please smash the like button. If it's not liked, we can't ask Bookmap to continue doing this at no cost. I'm kind of surprised they do. Because what happens in TraderLab, most traders would be glad to pay for it, I'm sure. But Bookmap has determined that it's good for traders and it's good for Bookmap. So everybody wins. But you know who wins the most? You guys. So while I'm doing this, if you find value in this, this is the time. Hit the like and use the link in the bottom of YouTube. And it's not just me. There's a whole stable, if you will, of streamers. Options, market mechanics, algorithmic behavior, all kinds of different stuff in there. Large cap, small cap stocks, it's not limited to this. But here's the thing about understanding this process. It is generic, because this is the basis of how markets work. If you can understand how markets work, you can transpose this in any time frame or fractal. If you're a swing trader, position trader, it all works the same way. So I've applied this across many different, all asset classes that have liquidity. Doesn't matter. Absolutely does not matter. Why? Because this is the market. So there to there. That's the last trade, and it's not necessarily a trade you need to take, of course, but there's your sweep, there's your selling, and your target is this. There. Trade's over. So now we're in real time, and I can answer your questions if you have them. There's JJ Marks. JJ, were you the fellow who was at a hedge fund? I can't remember anymore. Were you a hedge fund trader? I don't know. We have everybody in Trader Lab. Hedge fund traders, scalpers. And by the way, I'm not a fan of scalping. And let me say why. By the way, it's not saying you can't. What I have found, if I need to risk approximately 3 points per contract, I want to get paid. So this works for me, you know. But I'm not into trying to catch this kind of stuff because the dollars and it's again, it's not a recommendation, it's just me. If I get 10, 15, 20 point, 30 point rotations, I'm interested in that because I don't need a lot of those. But on a day like today, there's a lot of them. So over time, so think, and another way to look at it, when I take stops, and everybody does, I'm probing the market at locations that have an edge, but picking the exact thing is not our thing because there's no precision. So I take stops probing the market. But when I get the rotations that I'm working towards, they take care of the stops and still give me the opportunity for net. That's kind of what I came to. Being a frenetic short-term rotational trader, I've been there and done that. I used to be a high-volume trader, and I mean many years ago, trading the NQ over 100 trades a day. So I understand it pretty well, I would say. Is that a question for me? Josiah, is that it about the time frame? I'm not sure. Post your questions in the Discord Trader Lab or in YouTube. We got any questions there? Okay, here's our sweep. Now remember, the market is now short. What does the market do? Market goes up to go down. The market goes down to go up. Market goes down to go up. What's the condition of the market? Short. Now we have mid. Now you guys know, and sometimes I wonder about it myself, I am not a fan of the mid. Why? Everybody wants to sell the mid. Isn't that a good reason to sell the mid? How about that's a reason to be very cautious at the mid? Retail trader behavior. What I anticipate, remember I don't predict, is a potential rotation off the mid, and then a potential squeeze, and then a potential opportunity to sell. The other part is, and it's not a trade recommendation, yesterday's low is here. We can squeeze up into this and test yesterday's range. So for me, now I'm sitting in park, enjoying my pizza and waiting for another opportunity. Liquidity in the book. Watch the algos. Nothing to do. So this is not a vetted location. So for me, I just sit here. I'm a tourist. Every wiggle in the market is not an opportunity. An important level like IB, are they said valid later in the same session, or do they lose their relevance? Are they still like be touched? Yes. Is the IB still valid? This. By the way, did I miss the IB continuation trade, guys? Did I miss that altogether? I don't even remember. We have other structured trades in here. Did I not go over that one for you? The answer to the question about is the IB still valid? Yeah, it is valid. Um, well, the thing about the IB, this is the first hour's low. It's valid if we get below it and test it for the IB continuation trade. I think we already had it, though. I might have missed it. Don't remember. Yeah, I think we did. You guys, let me know if we had the IB continuation structured trade. Now we're getting the short. Once we come back across the IB, which is why this trade is from here to there, then we can counter rotate and we don't have to, remember the market could do anything. It could do the Acapulco cliff dive. But now we have stops and we're going to come into FOMC. That's going to show up. Don't forget. And if the market is short, you can anticipate the market's going to flatten out. You're going to take the sellers in here and they're going to, as they say, TTMAR, take the money and run. So that's possible. And if somebody's sitting short, they can get squeezed, just like what we saw on the 2 days up before today, which was the shorts getting carried out. And the market tends to do that. So if now the shorts get taken out, what does that suggest about FOMC or post FOMC? And it's not a recommendation. It's just a possibility. Well, high volatility, so no trade for me. And then the possibility of continuation. But because what's the higher time frame trend? And again, it's only an opinion and it's always subject to change. It's down. So squeezes on the upside. The dominant side is the sellers. And if you take a look overall at the quote developing higher time frame, even though theoretically we're in a quote correction, do you want to be a buyer in your own 401k or personal account? Or do you think you'd like to be flat? Or do you think you'd like to be a seller? Just ask it. And it's not a recommendation. It's a concept. Think about it. And that's definitely not a recommendation. You do anything. You always have to vet things for yourself and follow your own plan. But I want you to think about it. Not about what will happen, but what the possibilities are. Because trading is not about what will happen. It's about what might happen, why this liquidity is in the book, why we have a buy sweep, and why we might see a counter rotation. Why might that happen? Let's think about it. Why might this happen? You see something familiar? Please give a like in YouTube. Is everything hanging in there, guys, in Discord? We've had a lot of trouble with that lately. Any questions? How about YouTube? I've got about 25 minutes bonus time. So I'm available right now to answer the questions as best I can. As far as I've worked with guys at hedge funds, as you guys know, and quants, it's really pretty amazing what they do. And I'm going to tell you, in the retail space, we are the minnows swimming with the sharks and the whales. We are competing primarily against other retail traders. They're not in our business and we're not in their business. And the idea is at times we can catch a ride on the back of an elephant or a whale. And when we do, we get outsized rotations. And that could be very, gives us opportunity for outsized, rotations and outsized opportunity and also risk. So if we have a trade plan and the process is generic, so the way I have shared structured trades in TraderLab is the auction does not care about range. We do. And if we're in tight ranges, you're going to see the same behavior. If it's 5 points or 10 points, fine. If it's 20 points, 30 points, more, it's the same. If you learn process, all you need to do is only interact where you have an edge, and then the rest will take care of itself. So you need to know where to interact, how to trigger, how to manage your trade, and how to deal with the psychology. And since psychology and emotional states are nebulous in the sense of chemicals, have you ever thought about what happens in your brain when you're stepping in front of risk? Try stepping in front of a bus. What happens? Hopefully, without being conscious of it, you have a response that's primarily wired in your brain to jump back on the curb. That's what's operating at all times under the hood. So when you go to put risk on, you're not going to be able to activate because you're being protected. Micro high volume structure, liquidity, watch. Micro high volume. Let me show it to you. This is very advanced now. But by advanced, all it is nuance and fractal. Now, when I talk about fractals, you guys use the term time frame. The difference is there's no clock here. The behavior, the rotations are created by the participants. They're not looking at their watch saying, it's not 5 minutes yet. I can't do anything. Nope. It's an auction. The auction is continually happening, and I call it fractals because the clock doesn't exist here. It exists in the RTH, ETH, open, high, low, close, that kind of stuff. There's no clock here. It's rotations and behavior. So if we remove the clock, we have to use something else, and that's what order flow is about. That's why I have an order flow tool. I don't want to be constrained waiting for something. I want to act right here, right now. Liquidity, stops, icebergs, trigger. Those guys were absorbed. How do I know that? That's delta. Why do I know it was absorbed? Because of this. Because the buyers are here, the buyers are here. Why didn't the market go up? You're going to say it has a green bubble. Because it's delta. It is not. It's going up. It's why did it not continue? Sellers take control. Where are the sellers? And those are aggressors. They're under the buyers. Who are the buyers? Well, maybe initiators. Not for me to say. Sell icebergs, buy stops. Initiators, market orders. Sellers below, sell trigger. Now what? Where's the base of this? It is here where the sellers took control, right? There and here, but that's a little micro in the scheme of things. Let's see what happens here. It's a little micro in the scheme of things, right there. Right there. Right there. Microstructure. Only 4 buy stops. Thanks for playing. Look for the coupon to the buffet. Seller under the buyers. Buy stops. Micro trigger against the volume. Short. I'm only showing you triggers now. I'm not suggesting anything, right? Where to? Where's our last retail price? It's right there. Let's see. Target. Microstructure, advanced TraderLab processes. How we doing? Please give a like. I'm getting a question in the TraderLab. When we start the day with a short bias, at what point do we change our bias? When the context changes. And the context is south of the border at the moment. So depending on your trade plan and the vetted statistical edge, for me, I don't take longs. A long for me, and this is not a recommendation, is cover your short. So for me, until the behavior changes, which for me it has not, it's only shorts. I don't need to trade both sides. It's a waste of my time to flip my brain around. if I have a dominant side, which is a seller, today, I'm only selling. Yesterday, the dominant side was the buyer. I was only buying. Yeah. So, but that's subject to trade plan. And you're asking me when it would change. Well, it's got to change. And for it to change, things would really have to turn around. We're outside of yesterday's range. We're under this naked volume point of control. This is the high volume price in an intermediate time frame. We're rotating around it. And we have FOMC, so all bets are off. So for me, if I trade this, I'm only trading rotations. And I'd be okay with that. Or I'm in the Barca Lounger. Hope that answers your question. I can't tell you exactly because it's just not there right now. I really wish I could find that other chart. Let me see if I can find that chart. That I've lost here. By the way, the higher time frame is Investor RT. Very cool. So this, remember, market goes up to go down. Now this, in this consolidation, and this is the outside edge, which we failed to take out. This is the highest volume, this orange line, called the microcomposite volume point of control. This is called a microcomposite. It's a composite of RTH put together so we can see the consolidation. The market tends to come back here. So no matter what happens here, unless we fall out the bottom, and anything is possible, I have no clue, not my job, we can come back here and rotate. So what's the condition of the market? Shorts are down here, squeeziteria. Now longs are in here. Where's their stops? Under here and under here. So today, subject to, and again, not a prediction, we can take this out. Because the longs are sitting in here and their teeth are chattering at the moment. And there's no way to know what will happen. Remember, FOMC is a huge fundamental event. And the market, subject to what comes out of that, might have to reprice. And if the market reprices, it disrupts the auction and the market will move to another location and try to find a consensus on value. And the way it finds consensus is it rotates. What's too high? What's too low? What's just right? And now if you go to shorter term fractals, what's too high? Here, let's do it this way. What's too low? What's too high? What's too low? What's just right? So in the intermediate time frame, that's that retail price. And then we go down in fractal or time frame, if you will, and there's no time here. And we trade microstructures. It's all the same. That's why that's a short. That's why this is a target. And I'm not saying it's a short. I'm saying if you develop the skills, you can operate. Now, most of us want action. I'm going to suggest trading is more about profit. Just me. Don't need the action. I guess that short's doing okay. What do you think? Microstructure, too high. Microstructure, too high. Microstructure, break. Let me show you. I'm going to take you down again in the fractal. And what I'm showing you is not what I typically do in the stream, because I don't want traders to get the idea that, if you can't trade the broad stroke, you won't be able to do this. Remember, I've been doing this a long time. So I get what they call the hall pass. Remember that? Sellers in control, micro high volume structure, selling iceberg, exhaustion here. All this is fractal. Short, and then back to here again. And then if we come out the bottom, then you keep your helmet on. This structured trade here, and when I call it structured, I'm saying advanced, okay? It's only fractal. When you learn and if you do the work, and you got to do the work, so you roll your sleeves up and you say, okay, I'm going for an advanced degree in trading. That's what this is. This is advanced. This is not romper room, and you can learn this. You absolutely can learn it, and it's a personal belief. Anyone who comes to Trader Lab can learn how to trade. And it doesn't mean traders are willing to do the work. They're more interested in the dopamine fix. And if you can't control yourself, part of that is the chemicals in your brain. The other part of that is the release of the endorphins and the adrenaline. All this you got to learn about. And the only way that I have found to get control of yourself is to understand yourself and bring a trade plan to the market. All the work is done outside of trading. All we do in Trader Lab, or if you want to be, I think, have the potential to stay in this business, is to have a vetted, structured trade plan, and you anticipate your trades. You know where they're going to show up. You wait for them. It's like waiting for a bus. When your trade shows up, you show up, and because you've done the work, you know you have an edge. The casinos only play games with an edge. They're not making the games up. They're not changing the games. They know they're going to pay the gamblers. Have you ever heard of a business that doesn't have cost of production and overhead? Why would you think anything different here? I think that's okay this short. What do you think? And this trade, so you understand, could just go to there and be over. Or, here's the or scale, risk neutral. The worst that happens is you scratch the trade and your broker sends you a gift basket and you have trade management process that you have vetted. That's the other piece. All that's part of Trader Lab. Up to you. Please give a like if you're in YouTube. FOMC is tomorrow. Did I miss something? Maybe I don't know what day of the week. No, you're right about that. One thing about being in Costa Rica, I think they have a different calendar besides a different time zone. Sorry about that, guys. Mike is asking me how much weight do I give to icebergs? It depends. Sorry for a nebulous answer. They don't stand alone, and they have a different agenda. In other words, they're not us, they're different guys. But the assumption is if you're using an iceberg order, you're more sophisticated than the average retail trader, right? So it's the behavior. So it's components. So we could see big selling icebergs and the market still keeps going. So it's not a buy or sell indication. Just like the liquidity. Look, we took the liquidity out. Does that mean we sell when we see liquidity? No. When we see a green bubble, does that mean that we are buyers? No. It's interpretation and understanding market mechanics. So all these pieces fit together. Order flow, just like any other tool in our toolbox, is something we can use and we can integrate. By the way, IB, watch. This is the IB continuation. I think I was talking about this earlier. This is also a potential short. It's a structured trade in the Trader Lab. And let's take a look at this. Now, the low is here. So the possibilities are to rotate back in here and come back here, one possibility. The other possibility is to test this low and maybe take it out. This is another target in a higher time frame down below, not a recommendation. I've got about 10 minutes. That's like eternity in trading, isn't it? Do you have any questions? Post them. Groot, do I know the link for this IRT auto generation? Well, if you're interested in IRT, it is a separate platform. It's a higher time frame platform. All the other stuff besides order flow. You can Google linsoft.com and if you're interested in that tool. I've been using it, I think, since 2007. So you might say that. So quite a while. And of course, before that, I used just about everything else. CQG, all those things. So here's a sell sweep. With a sell sweep, we can anticipate the possibility of a counter rotation. This is a structured trade in the Trader Lab called the IB continuation trade. If you took, now here's how you would trigger. Not a recommendation. You got to vet this. Micro high volume structure is here. Watch. I mean, it's here. Break, trigger. Let me try to show you this before it scrolls off the screen. Now you got to vet all of these. I'm really hoping Bookmap will make an adjustment here so we can extend these. So there's resistance. Stop would go here. Not a recommendation. Entry is there. Stop there. Break here. Let's go down in time frame as you think of it, or fractal. I'm going to draw. These are all micro consolidations. You can see the micro high volume there. It's all the same. Fractals. What's a fractal, by the way? I should explain this to you. A fractal's a Russian doll. Matryoshka dolls. They're inside each other. So what I'm doing is I'm operating in, as you think of it, as multiple time frames, but I don't use the clock. I'm using the participant behavior. Sellers are here. Buyers are there. Break low. What does that mean? The sellers are in control. The buyers were here. Order flow. Sellers, you see the aggressor? Come back and test the sellers. I'm not paying that. Sellers in control. Microstructure now is here. Buyers were there. They got thrown under the bus. Where do we test? The sellers. What happens to these buyers? Thanks for playing. You get the coupon to the buffet. Where's resistance? Here, here, there, there. All these are shorts or trade management opportunities. Doesn't have to be a short. It can be whatever you want it to be and whatever your trade plan says. What's too high? There, there. Where were my buyers? Under here. That's why we lifted. What happened? Trigger. Where's the micro high volume structure? It's in here. Short again. Now, when I'm saying shorts, they're not initiative shorts. They can be trade management structure. It's up to you. I'm just helping you read the footprints. And where are we? Low of the day. What do you think might happen ahead of a current low? Profit taking. Where's the change in behavior? So you've seen the selling. 1 second. There. My trackball got stuck. Micro high volume structure. See if you see something different. Sellers in control. High volume is here. Watch. Now you know why I kind of do what I do, maybe. You can kind of see it. So, sellers are there. Sellers are in control. Buyers are here. Sellers are here going to zero, right? High volume is here. Sellers are here. Sellers are there. They're still in control. Why didn't we go down here? You're going to ask me. Because of absorption. Do I know they were absorbed? No. When do I know? Here. What do I do? Maybe, subject to, either my buy stop sitting here above this, where the sellers are in control, or my buy stop, I'm out here. Again, it's all up to you, not up to me. Does that make sense? Please give a like. If you're in YouTube, use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. Take advantage of all the additional education. Stocks, options, crypto, order flow, of course, with a high-tier tool like Bookmap. Swing trading, if you're inclined, market maker behavior, algorithmic behavior, you name it, it's there. And it's all available at no cost. By the way, let's extend this out. See what happens here. Let's watch this. Let's try to watch this. I got to try to extend it. It would be nice if it would extend. Let's watch this here. and it's not a trade recommendation. Let's look at the alignment. Our low volume outside edge now is kind of up here, I think. Oh, there's a little notch right there is low volume also. I got low volume here where you see this, and I have another low volume up here, and this is an outside edge. We're going to see if we come up here, and remember, microstructure is also here, right at the high of this rotation. So we have this, and we have right there, kind of right where it is, and the low volume node, and the low volume node. So this is an outside edge, and up here is also an outside edge. I think it might be covered up. Let me just throw this in here. I'm running out of time, guys. I got 4 minutes. Please give a like. If you want more of this, please come to Bookmap Discord Trader Lab community. There's a lot going on. Let me show you this if I can. This is what's going on here. A fair value gap. I don't interpret them. Sorry about that. So it's a full community. There's all kinds of stuff going on in here. Here's something, Trader Lab statistical targets. You'd have to vet that for yourself, of course. All kinds of statistics. Charts are posted, conversations, occasionally a little bit of humor. Oh, very nice, the monkeys. Let me show you the library of webinars that I've posted in there and shared. Let me try that again. Primer webinar. Now, if you want to see an overview of this whole thing with higher time frame integration, you look at this one. I planned, I saw, I traded. Day trading, fantasy versus reality. Are you a trader or a gambler? Why most retail traders using indicators failed? Are you trapped in trader Groundhog Day? That's where you keep doing the same thing, trying to fix it. And the reason we try to fix it is because we have winning trades, so we think it's just a matter of fixing, you know. Order flow and volume profile wins. How to trade high volatility reports, gaps, advanced user session, and then pre-market planning. It's a 3-part series. I think you might want to look at that one. Advanced trading rotations with microstructures and the rest. And then there's PDFs you can download and a lot, not only what I've done, but, you know, contributions by Trader Lab participants. It's all available. Okay. So use the link in the bottom of YouTube if you want to visit Trader Lab. Again, there's no cost. In addition, there's a Trader Lab community. Doesn't matter how long you've been trading. It's not about time in. It's about your desire to build a business. And the Trader Lab's here to help you on your journey. Please give a like. Thanks for visiting the Trader Lab today, guys. Remember, these streams are available to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, build out your trade plan. You need a trade plan, and you need, in my opinion, only to interact with the other participants when you have a vetted statistical edge. If you don't have an edge, you're gambling. And I always say, if you're going to gamble, just go to casino.